The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
Good afternoon, traders. We finally got action, and I like to say smaction. Some action out there in the marketplaces. It is a beautiful Wednesday, October 10th, 2012. And it is a beautiful day at the headquarters of Technical Trading and Investing, TFNN.com. Another wonderful, beautiful day out here. And it is World Porridge Day. I guess the home of porridge is a small Scottish Highland village of Cambridge, where Carbridge, where the home of the annual World Porridge Festival Championship is held. If you win, you get the Golden Spurtle, which I guess is looks like a drumstick painted gold. I don't know if that's actually what it is, but a little, it's not the most well-known thing out there. Porridge is a dish made by boiling oats. I never actually knew what porridge was. I just kind of remember, oh, he's got some porridge-like stuff out there. But I always just remember, excuse me, sir, can I have some more? Yeah, that's about it from, what was that? The Oliver, yeah, that's what it was. So, but anyway, Mr. Porridge, apparently it's very popular because you can feed somebody for about a nickel for the entire year. And apparently that's why it is apparently especially not much eaten in the first world anymore, but pretty much I did read somewhere where you can feed somebody in Africa that they're saying about $1.50 a month. Seems awful little. But anyway, boiling oats, rolled crushed, or steel cut. I'm not exactly sure what steel cut oats are, but some other cereal meals in there too, with a little bit of water, milk, or both. And that's keeping people alive. And if you ever make the best porridge in the world, maybe it's not even possible to make something out of boiled oats that tastes that good. I always think of Cheerios. Boy, probably the kids would go nuts about that in Africa. But I'm sure the Cheerios would probably automatically get the Golden Spurtle. But I have to tell. Anyway, say hello to my little bowl of porridge. Ballmer of Microsoft, of course, the CEO. Anybody that's listened here long knows my absolute... what would you say? Don't like CFOs becoming CEOs. They seem to, I would say 90% of them to 95% of them in a tech industry company go down in flames. One of the reasons I suspect Apple's having some of its issues, they are trained not to take risks. They tend to be kind of expect everything is going to work out on a timetable. Only people that are really been through the rigmarole of designing and building stuff know how random it is. But Steve Ballmer did not get his big bonus last year. He makes about $675,000 a year at Microsoft. Not a lot, but he can make twice that in his bonus. Of course, he's got a lot more in options that he would get if the company can get up in price again. He's a failure. Basically, the board cited his failure to ensue the company provided a choice of browsers to European customers so that they wouldn't have to pay some fines, some other stuff. And I think this is kind of the board saying, if you don't make this work out with Windows 8, you're done. He's had basically 10 years of going sideways, a little bit of interest out here, and most of it hasn't been anything he's touched. It's been stuff that has been working. His original Microsoft phone, I spent about $500 million just on advertising to see it go nowhere. Probably a much better off effort here in Windows 8, but if it doesn't come out very close to his predictions, I suspect that he is done. And I think this issue with the bonuses is a shot across his bow that he better perform, or they're finally done with him after 10 years. I would have gotten rid of him after 2, but I think Bill Gates basically said he was not coming back, and they couldn't take anybody else or find anybody else of the stature they needed to go in there. A lot more discussion about the iPhone 5 being a little bit thin-skinned. We've got scrapes and sparked complaints about just putting it in your pocket with your keys is easily going to mar it up. Apparently, it's the same problem that's causing a lot of production problems. And that is that they tried to make this thing weigh so little that they didn't and couldn't get the coatings right on the anodization, which is kind of like, think of it as rust on aluminum. Just a thin coating on there just doesn't make it easy to put on there. But it looks like, at least from the reports from Foxconn, that a great deal of the production problems still in iPhones is getting this thing out and getting it out without scrapes on it even before it gets to manufacturing. So they're having a great problem with the aluminum casing on it, and it continues on. But Amazon or Apple was up. Yeah, it was up about $10. It's up about $6 now. The big thing is on Apple is going to be the retest of about 621, 622. If you get it on volume next, then we're back down to the other side of around $590 to $600 fairly quickly. Apple versus Samsung. The judge, we've been talking a little bit about it on this show. That is, a lot of people have been saying, oh, Apple won the patent suit and that was it. Now that Apple has asked for injunctions, it's gone to a judge who is not in the same case, and he's basically read through all the work on it, and he writes that he can't rely on the jury's verdict because it arrived at a contradictory conclusion. Something is really wrong with that jury's verdict, and now the judge at the ITC has said so. So there's kind of a administrative judge, which is I think the legal term for it, has gone through the ruling and basically said it's full of crap, and I don't suspect anything's going to happen, and Samsung is not going to find itself injunctified out of it. There's also a lot of argument on whether Apple actually, in a fair effort, actually tried to negotiate any kind of patent fees with Samsung. Basically, they offered him something that was not doable at all, and then Apple would not ever come back. And Samsung provided a lot of the transcripts of those interactions. So right now, actually Samsung's got a lot going on its side now, with the administrative judge saying basically he didn't think that the verdict was worth the paper it was printed on from Apple. And let's see how that goes up. Just wanted to remind everybody, we've been talking about it forever. I'm thinking Facebook wasn't doing very good today. Last I looked at it, it was about $20. Let's see, let's do a quick change or check here in on it. Let me get my quote system up. And see, what do we have? Try to add that real quick, get a quick quote on it. But we've got, what is it, 1994, that was the high today. 1969 is the current quote on it. I suspect we're going to have the worst time for Facebook coming up very shortly. We've got, just a few days off now. We've got the 16th through November 14th. Directors and employees can start selling some stock and options that would total about 247 million shares. These are the weakest hands that will be in this stock, most likely. They've seen the stock go out at $38 only to see it drop in half. So if they were worth $1 million and they were sweeping floors, they're worth $500,000 now, kind of a big hit to take. After November 14th is what they're calling the Big Kahuna. about 1.2 billion shares come available after lockup, and Zuckerberg will be allowed to trade 60 million shares of that himself, along with some of the other insiders on it. But I don't suspect that he's going to come back anytime soon to start selling those. But I suspect that there are a great deal of many other people that are going to be thinking about getting out, because they still haven't come up with a coherent plan on how they're going to make money to actually work out those billion people that are on Facebook. But just remember that about a week from, what is that going to be, next Tuesday. And then, of course, December 14th, another 150 million shares are free to trade. The last hookup in Facebook is going to be May 18th next year. And there's a couple of groups that have about 47 million shares, but I suspect that's not going to be a big deal. But these are initial investors that were hung out on the long side of this trade, but I think everything will probably settle down. Probably, I would imagine that if Facebook continues the way they're doing after the rest of this lockout, back of the envelope calculation, probably says somewhere between $8 and $12. Anyway, Dan Ariely was giving an interview this morning. I got to see just a little bit about it. If you haven't ever read his book, Predictably Irrational, very good book about economics, and economics not like the frauds and charlatans we see on CNBC predicting all kinds of economic news. These are guys that actually do real physical tests in the real world where people have to pay money, kind of like we were talking about Vernon Smith yesterday or the day before. He's done real tests out there, but he's got a new book. It's called How We Lie to Everyone, Especially Ourselves. Kind of hit me this morning, especially after some of the news the last few weeks. Been bringing up polls, and I think I'm going to bring this up hopefully apolitically. But it is something we need to think about, because the news is there to distract us, and most of the time to help us make the wrong decision. We talked a little bit about polls and even stock movements and predictions by a lot of the talking heads and pundits on CNBC, some of the other ones out there. His new book is about dishonesty. Now, it's kind of interesting that he was having his interview with one of the people that is the poster child for being dishonest on Wall Street. But I was almost thinking about the equivalent. We'll come back in just a minute. But just the equivalent of how these political polls have been going. And we're going to talk a little bit about that, and maybe how we can be better traders by understanding what these polls are saying, what they aren't saying, and understanding the statistics. We'll be back in just a minute.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
We've got a caller, so we're going to go right to him, and that's Doug from Atlanta. How you doing today, Doug?
I'm doing fine, David. I was wondering if I could get you to comment on the developments on OCZ today.
Basically, they came out with a material paper, 10K, and basically they got WAMP down about a third, and just a huge volume out there. No one likes what they've said, which is they're starting to run out of a little bit of money. They've got a new CEO. He's gone and looked at the books, and he's basically trying to clear the decks out here as the new CEO. It's no different than any CEO that comes into a company that's headed down at the moment, like HP. They get in there, and it's the cockroach theory. There's one cockroach, there's 1,000 that you don't see, right?
Right.
When you turn on the lights, so you got to make sure you're looking for it. Basically, this was the CYA of filings, and basically from the history of this guy, this company is going to be shopped for sale, and they just didn't like how much money that he basically said it was going to take to keep this company running, and everybody hammered it fairly quickly because they're afraid they're going to run out of money before they get it sold.
This company competes against Intel with their chipset, is that correct?
Yeah, I mean, they still make the fastest and best drives out there for SSDs, but it doesn't matter when they keep running out of money.
Right.
The CEO now basically says that he can't get the contracts or the memory as cheaply as somebody like Intel or some of the other bigger companies out there, and they had to sign a contract, and the board didn't want to allow them to sign the contract. That goes back to the old CEO of how much they needed to actually buy. Anyway, they bought a lot of memory trying to get a good deal on it. Memory prices fell, and that pretty much was the end of that CEO. The new guy is more of a CFO kind of guy, a numbers guy. I would buy the thing if it got low enough and they didn't have any debt, because they've got basically the best products. What they don't have is the ability to make money on them right now. I think part of it said that they were going to have about a 25% loss in the next quarter, and no one wanted to hear that.
Yeah, I'm not too sure. The new CEO, the Schmidt, it seems to me his background is in sales. I'm not too sure he really knows a whole lot about technology.
Yeah, I don't know much about him. As far as I can tell, you got two avenues. One, they start issuing a lot more stock, and this stock price even goes lower. Or two, they get bought out. I'm waiting for this thing to find its terminal low, and then I'll buy it as a non-expiring, unless they go out of business, non-expiring call. But you don't want to be in this kind of market when the market's headed down, Apple can't be doing anything, and come out with any kind of bad news at all. And that's basically what these guys did. It's not end of the world news, but we've got to be careful. When's the next time they're going to tell us the same thing again?
Yeah, it's also not promising news.
What's that?
It's also not promising news, as in, it didn't seem to me like, he painted any bright picture going forward.
Well, one thing, they make the best drives. Someone's going to be smart and just buy them out.
Yeah, buy technology.
And they've got some of the best technology in-house, but not in their products yet for virtualizing the drives. They've got some other stuff that they've been buying. And I think part of the problem with this company is they continued to buy additional technology over the last probably year and a half. And probably a few of those acquisitions they probably should have held off on. I understand why they did it. But part of the other problem was that everybody's so focused on tablets now that they don't want to even think about buying drives for regular PCs. But they still have the fastest product. I just read a review yesterday or the day before. In fact, I bought a bunch of their 120 gigabyte versions just a couple weeks ago. And they still make the best SSDs out there. They just are having a real hard time getting the right price on the non-volatile RAM to actually make money. And some of the bigger companies out there are willing to sign contracts. And I think when it finally came down to it, the previous CEO got canned when he said that he just wasn't going to make this thing work until they got good money on the RAM, and the rest of the board of directors didn't want to be signing any kind of long-term contracts.
Okay.
But that's pretty much it. I think that there's some money to be made in this thing, but it's going to take some patience, not be going after it here today.
Right.
See you in a bit. We'll be back, and we'll pick up on the news and then start getting to some of the stocks out there.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
We get back, we had a high of 1442 today on the S&P cash, and we're down 1433 now. I suspect we're going to get down into 1424, and we'll talk a little bit about that later. I wanted to just work a little bit more news in before we start on charts. But in his book, How We Lie to Everyone, Especially Ourselves, a pretty good interview, but it kind of made me think of a news article I saw about 10 days ago, and under oath, maybe it was 10 days ago, it was last week, under oath, a pollster admitted that in the final weeks of Edwards, and that's John Edwards, the presidential candidate in 2008, Hickman himself cherry-picked public polls to make the candidate seem viable, promoted surveys that Hickman considered unreliable, and sent emails to campaign aides and Edwards supporters, and reporters argued the former senator was still in the hunt. Basically, he was lying to everybody, but he had already told Edwards that Edwards was going to lose, but Edwards had a lot of money. He didn't have, needed to bring some more money in to basically pay off a lot of his campaign debts, and that we weren't going to be telling any of those pesky supporters that those polls were basically made out of whole cloth. This week we've seen a lot of yelling and screaming after last week's debates that somehow there's been a 20-point swing in the polls. Those polls were no more right 2 weeks ago than they are today. Everybody keeps looking at stuff, and it's total junk and lies. And I want to give you a good example of that just before we get too wrapped up in the politics of it and actually try to turn this to what we can understand in the stock market. And that is, just imagine that there were 500,000 Ford F-150 pickup trucks sold in 2008. And let's say 375,000 Chevy trucks. And I don't know if that's accurate or not. We go out today and do a survey with that ratio. We're going to ask 500 Ford owners and 375 Chevy owners who makes the best pickup. Well, what do you think they're going to say? But let's say that in 2010, 2 years ago, Chevy came out with a brand new pickup that got much better fuel mileage. Does it make any sense to use those same ratios for who's going to say who makes the best pickup? Maybe some of those guys that bought pickups in 2008 traded them in on the 2010 Chevy model. And just because there were 500,000 sold in 2008 doesn't mean Ford sold 2,000, or basically the same amount in this year. And that's basically what a lot of these polls are trying to tell everybody, that just because something happened 4 years ago, we're going to use those same numbers today. No one knows what the correct numbers are. It's a lot of noise, and it's a great way for politically expedient people that want to generate news for 24-hour news cycle on cable to generate news. Nobody knows exactly what that ratio is. You can surmise it, but I'll guarantee you we aren't talking about 3/8 of one party voting and 5/8 of another party voting. A lot of people got sucked into the belief that the polls were real because that ratio is just about right. Some of these polls were actually saying that just because so many people voted in one year, they're going to vote exactly the same this year. It would be no different than Chevy and Ford pickups. I think part of being a good trader is also thinking clearly in the rest of your life. Whoever you're for, vote for them. I'm not saying not to, but what I'm saying is don't get all wrapped up. There's people talking about, don't walk close to any of those buildings. Some people are looking like they're ready to jump out the window. I don't know who's going to win. I know that it's probably very close, within plus or minus 2 or 3 points when the election comes on the 6th of November. But it's the same thing. You're going to hear a lot of lies. Probably a good exercise is going to be actually sorting the noise from the lies over the next few weeks. What do we've got? 30 days, 28 days for the election. You don't have to win or lose any money on this. Vote for who you want to. But as it goes through, try to figure out what the reporters are saying and how it's biased, and look at the numbers, and look at the margin of error, and look at how much they're favoring one party over another, and really find out, is that poll worth the money it's actually printed on? I suspect that most of the news that I look at news fairly daily to bring you the news here on this is that it took me a little time to get really used to figuring out what is important, what isn't important, whether or not the people saying anything on CNBC have a bone to pick or a dog in the fight. Are they like when I originally decided to shuck off news when I first started trading in 1998 to see somebody say, buy Coke. He's the biggest trader. He's made the most amount of money. And what was he doing that I found out just a few months later? He was actually selling Coke. Our wonderful Warren Buffett was saying one thing and doing another. It's no different than the politics. Everybody's got a dog in the hunt. Anytime you see them, think about how are they going to profit on it? What are they going to do? Why are they saying this? And why aren't they just being quiet? If they are making so much money, do they really need to go out and say anything? And my question is, just how different is it? But the other thing is anecdotal evidence. And one of the best examples I've found, at least in politically, is there was a gal who was a big critic on Broadway, and her name was Kale. I forget her first name. But in the wake of Richard Nixon's landslide victory in 1972, she's quoted as saying she couldn't believe that Nixon had won since no one she knew had voted for him. Well, you know, we all try to get together here in the Tiger community. The one thing is to always know that anecdotal evidence like that, just because everybody around me votes one way or thinks that they should be long this market or short this market, just make sure that you try to come upon your decisions by yourself and not what everybody's telling you out there. Look for evidence beyond everybody around you. And don't be quoted one day as saying you can't believe why Nixon won with 60-40 against somebody else. I think it was easy to see that that Nixon was going to win. You know, I think if you really think clearly, I think in the last couple of days before the election, it's going to be very clear who's going to win this next election. And if you can cut through the lies and the noise and the people that are more than willing to lie to you to get a little bit more money in the last few days of this election. If people talk to me about why it is very hard for me to be bullish on this market right now, I've got a great chart here, and that chart hopefully everybody's seeing on Tiger TV or in the den right now. This came from a presentation last night from the CEO of FedEx. And this chart basically shows the exports for these countries and how they've been slowing down since 2010. They continue to move down. His forecast is that they're going to continue to shrink. There's no expansion of U.S. business. There's no expansion of literally any of the big major countries out here. If there was an expansion in that business, I'd be thinking about being more bullish out here. What we see continually is that we are not seeing a world of expansion right now, especially when China started to put on the brakes in 2010. They've continued to do that well. But we see fairly linear numbers, and they are going down. And his forecast was not any more for next year. In fact, he suspects that the same trend line is going to go through at least to the mid part of next summer. So, you know, when you think about being bullish, how can I be bullish when I know that there isn't a lot of things being shipped around by FedEx? You know, I know a lot of things can come across in transporters. But if we're seeing a lot of economic and activity and all these green shoots everybody's talking about, wouldn't we see a lot more shipping for international shipping by FedEx? I think it's a great barometer out there and the canary in the coal mine that when we start seeing these guys get more bullish on the economy, then maybe that's exactly what we should do. Right now, I suspect that the Fed and the Treasury has done everything they can to prop up asset values, but the actual underlying part of that just doesn't exist. And when that reality hits the fan, the brown stuff will fly. Anyway, we're going to get into some charts here fairly quickly. First one I wanted to get into was IBM. Let's see if I got back up here. We've been watching this one. It is a bad signal that when you hit a previous high with higher volume that you instantly close back below that. And then, you know, you go sideways for a little while and retest it even on a lighter volume. We're seeing that in IBM now, and I suspect we're going to get back down to the 204 number fairly quickly, probably in the next couple of days. But what I would suggest to you is that we are having a market that is continually pulling back a little bit farther, that you want to watch the close today, and you want to watch the close on a couple stocks. The first one's going to be IBM, and the second one's going to be Apple. If we were seeing some kind of mass rally where we're going to 1,550 on the S&P, that could still happen. But I'm still thinking that we hit 1,350 on the S&P before we hit 1,550. And if we hit 1,350 on volume, we're headed lower. That would only be a 100-point move, and we could see that in a matter of weeks or months. and then that would be the time to get bullish again. But right now we're seeing the major movers out here in the marketplace basically come off, and there isn't a great deal of volume yet, but I suspect it's going to take a little bit longer. What we saw yesterday was fairly decent volume, and today, are we seeing a huge movement up with continuing volume in Apple? And that is not true. This thing looks like it's setting up a little ABC. That next ABC would take us probably back through that, $621, $622 level that we saw yesterday. Actually, 623. The bottom of support is 621. So what I want to see is that go through there, and if you have more than about 29 million shares that we saw yesterday, I suspect that the most logical conclusion is that we're going to see weakness back down to the gap at 590 to 600, and then a test of the 570 range. Now, a lot of people say, well, Apple's going to sell a lot more products. We've gone through the whole discussion about actually it doesn't matter. It's all about margins with these big companies, that investors do one thing on the street and basically fund managers, and that is when they see margins start to fall, they run. It doesn't matter how much more business you make. Even if you made 10% more money, if your margins are falling, they are figuring you are cooking the books. That is how CMG and the call by what was the guy's name? We had our own internal guy do the short on and hit the home run on CMG, but somebody was basically short a lot longer than that, and that's the what was the guy's name? We brought him up a few days ago. He's a big Wall Street guy. I'll think of his name in a minute. But we continue to see Chipotle Mexican Grill look and test these lows. Right now, you've got basically a low out here with higher volume. This thing still needs to get tested at 278.01. And if you're thinking that this market's going to bounce, you're going to want to start seeing some of these stocks out here that have higher volume lows actually test these lows with lighter volume. We just don't see them yet. So, Basil was our internal guy. I was actually thinking about the other guy. I can't remember. I brought him up a couple of weeks ago about the World Investing Conference. I'll think of his name here in a little bit. Einhorn. Yeah. Thank you very much, Tom's son, Tommy, in there. He knows him because he's a big poker player. So, but Einhorn started shorting this thing in the 420s. But he's not just taking $100 out of it. He's looking for $300 out of this thing, and he's not often wrong. Why he saw this was the margin starting to slip and competition starting to come on. Another one that we want to watch out here very closely is Yahoo. Started hearing calls today from a lot of the guys at the CNBC talking heads to go after this thing short. Not Yahoo, excuse me. Amazon. ZN. Anyway, we'll come back and we'll cover Amazon. This thing is going through the gap today. We're going to watch the volume on that. So far, it's not there, but if you come back a little bit farther and even to the gaps at 220 fairly easily, we'll have to watch it fairly closely. Back in just a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for.
Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Thomas Edison didn't invent the light bulb, he made it better. As the fourth most prolific inventor, Edison found that most people failed because they failed to realize how close they were to success before they gave up. Success requires a few disciplines, practice each day. When it comes to trading and investing, one of those disciplines is understanding and acknowledging the language of the markets. For centuries, Japanese candlestick charting has unlocked the hidden treasures of the language of the bulls and the bears, the buyers and the sellers. Candlestick charting is a tool, not a trading system. Candlesticks tell you when to enter, when to exit, and identify the risk and reward for every trade. Candlesticks identify market turns before they happen. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, and on Friday, October 19th, I'll be conducting an online one-day course teaching you the secrets of Japanese candlestick charting. Go to the homepage at tfnn.com and sign up today, because candlesticks will make you a better trader.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Anyway, I wanted to go to Amazon here and show it. It's got the highest PE of any of the big tech stocks right now, other than companies like Facebook, who really don't have earnings yet, or a lot of those new IPOs. But when we really think of the big movers of the marketplace, we need to always be looking at these ones that have super high PEs. I think, depending on who you listen to, the PE is anywhere from 160 to 100 on forward numbers. Amazon also, we've been I can't even say it today, talking about it on the show, in that they are going to be collecting sales tax. I suspect that's going to hurt them a great deal more than a lot of people are talking about now. Yesterday we saw Walmart coming after them, and today most of the talking heads on CNBC, I don't really watch it. I kind of fast forward through it and watch the closed captioning on it. Saw a lot of people out there saying go after this one as a short today. You don't really see a lot of volume yet, but what I suspect is if you think we're probably going to see this one and a few others that have these huge PEs for growth, that if these things really start getting extremely weak, and we're probably going to get a good indication that 1350 on the S&P is a likely candidate. Of course, the pie in the sky, earnings per share. If you're paying $160 to make $1, or even $100 to make $1, doesn't sound like much of a deal. And I don't see that there's a whole lot in Amazon's future that is going to change that. Now they're going up against Walmart, that has their own locations and their own, shipped to the same location every day. One of the interesting things is Walmart already has the infrastructure to do that, the shipping and trucks showing up every day. I suspect that we're seeing a little more weakness on this. It may take a little while for that to sink in, but if we see fund managers leaving this one, I think you're going to and really see a lot of hits to this fairly quickly, and let's say in the next couple of weeks. I think that there's a good indication that this is the canary in the coal mine to start indicating that we are going to see 1350 on the S&P fairly quickly, at least before we see 1450 again. But no volume yet, so no really good signal. We're seeing some price destruction. We're seeing it go through a little gap up. The next one is at 220. We're not seeing a lot of enthusiasm, even though we're really starting in earnest next week earnings. I suspect that we're going to start seeing a lot of these companies continue to guide down, and right now that's all you have to do to get blown apart. Witness OCZ that we saw earlier. Monster Corporation, the same kind of stuff, but that's almost a perennial on the big losers every day. Big short position, and this thing is volatile. Probably be a good day trader if you wanted to get into it. But we're looking at this one, FFIV. These are the stocks you need to be watching right now to give you an indication of what this market's truly wanting to do. A high volume low is not a low until it's been retested. Monster Beverage, MNST, needs to test that previous low out here at $50.19. It was greater than the previous one by about 300,000 shares from August 13th. That September 13th low, that's a bad day, isn't it? September 13th. That wasn't Friday. Don't know. Anyway, look at Monster. Look at FFIV. Watch how IBM closes tonight. Watch how Apple closes in the last 5 or 10 minutes. I think it's going to give you a good indication what we're going to see at least through the next, probably through next Wednesday, where option expiration starts. See it all tomorrow.